Sundar Pichai once about the AI bubble that's likely to be taking place, or that's likely to have a potential to be taking place. And this is what he had to say about the AI bubble in simple terms. Well, recently he issued a cautionary note on the AI sector explosive growth, describing it as an extraordinary moment, but one laced with elements of irrationality. Quote, irrationality. Okay. That could sign a potential bubble akin to a dot-com era of the 1990s. He made these remarks in the BBC interview actually. We should try to understand that this is not a man or any other normal YouTuber who's gonna come off one early morning and tell you that, yeah, tomorrow there's a bubble, or any kind of a group can tell you what's gonna be happening, the one or the other. This is among the men who are caught in the big tech, men who are like above, who are likely to illustrate as someone who's ahead of time, I would say, in terms of tech. But if he comes out and say that there's some irrationality in the AI bubble, that's where the angles start to show up, and you feel like something's kind of off, or it's kind of like not the real line. Things are not aligning up in the right way. Let's just look at some numbers. Why is he saying so? Well, in the first place, we should try to look at the sour valuation and these potential investments. AI companies and startups are commanding sky high market caps despite the current revenue. For instance, the 1.5 trillion network deal surrounds the entitles like OpenAI, yet projected revenue for this year are less than 1,000 of the scale of the investment scale, echoing the irrationality. Where I would say he's right, because if you remember well, the dot-com era of the 2000, where everybody knew that the internet is gonna be the big thing. However, the biggest question was, are they paying for the right price? Are they looking at the right price of the AI bubble? Are they really looking at the right pricing? Are they investing wisely? Are they investing in the higher moments when it feel like it's overhyped for the current time? Or is it something like someone would have to look back and really think about this in simple terms? Because the way you invest matters. The time of investing and when you're investing really does matter. That means that if you're investing through AI right now, are you sure you're on the right boat at the right time? Many investors may not consider this, but I would highly think about this in a bigger way. Someone would be thinking about, like, if you're investing into something, like, should you buy low or should you buy high in simple terms? One of the other reasons that I would say that is the massive unchecked spending boom. Okay, the industry is pouring trillions into infrastructure, talent, and development with a regard of immediate returns, creating a feedback loop of hype that could deflect abruptly if profitability lags. We should try to understand that this kind of a move means one or two things. Like, companies are overspending. I'm going to give you an example of OpenAI under Sam Altman. This is a company that has been highly spending and just making over around 20 billion from rate. This AI company is actually said to be almost like it spend almost, or have a loss of 8 billion just in 2025, because 2024 they had a loss of over 5 billion, and right now they are likely to be having a loss of 8 billion, but they are spending over 1.4 trillion. The expenditure and return don't really matter. Like the math doesn't matter in simple terms. This leaves a gap where you feel like something is really off and something really rugging, like there's something that's truly off. To you as an investor, you have to have an open eye and think, where are we really heading? And is this the right path? Okay. And what's the backup for me if things go south or the road turns in simple terms? Let's look at one more other view, okay? The border market echoes. This mirrors the historical tech bubble where early investors led to correction. Though PH believes the underlying value will endure post-bust, unlike some .com ventures. Of course, that mirrors a lot of what happened in 2000. Because if you remember the Amazon, if you remember with the Amazon internet, Amazon, everybody believed that Amazon was going to be something big. Of course, as of right now, it was big. But that's why if you're investing, I would highly recommend you you don't invest in one place in simple terms. And secondly, I would highly recommend if you're an investor to be investing in the long term, not in the short term. If you invest in the short term, I highly recommend you should be thinking again if you're investing, especially into any kind of tech industry. Because if you look into the historically, the tech industry has done its level best to make the AI tech to look as something that has actually caused one of the biggest recessions. Because ever since we started having tech recessions, okay, the 2008 was about the housing market. But if this happens, that will be the second tech recession. And I promise you, tech is a venture that overhypes everything and feels like it's the new gold or the digital gold. And just within a matter of period of time, regardless either it's beginning or it's on its high, it's all unpredictable. Unless you're a long-term investor, who will be like, I don't mind the short growth. I don't mind how lower it should be going. We should also try to understand how it impacts the economy if things go bad. If it happens, what's going to happen? Well, expect the following. Expect contradiction in the GDP growth either by 1 or 2%, especially the US GDP. Expect high layoffs or higher employment. Unemployment rates at least 2 or 3% more. Expect the stock, what I'll be calling it the slow growth in the stock. Otherwise, the stock market will also contradict in simple terms. It will also have a short back or a look back. In simple terms, it will contradict also at least by 20 or 30%. Because investment in AI will contradict because the short-term investors will be wiped out. Will be highly called out. They find themselves in a position where they can no longer look back and say that we once invested in AI. Because whenever you're a short-term investor, you have to have a clean eye to know when to come in and when to go out. Otherwise, if you're investing right now in AI and you're a short-term investor, you have to think again. You have to look well with an open eye and believe that, and think again about where you're heading to and where you're likely to be. Just keep your eyes wide and open, regardless. You should try to understand that this kind of a move with AI and how it's highly exciting and the way it is, we have to treat it with an open eye. Otherwise, we should try to do our level best to invest in different patterns. Let's say if you're investing into AI, I wouldn't highly recommend to invest in just one area. At least keep your investment in two different priorities in simple terms. Maybe housing market. Regardless, everything looks like a bubble. Just invest smartly. Otherwise, think 40. See you the next one.